the US government made it allowed for individuals to own gold. So that means people at one point were not allowed to hold individually gold. And I totally agree with Calvin on that point. It's actually like really counter intuitive for Bitcoin reserves to be totally owned by governments and their reserve. We are early and we are cherishing the price surge when Trump talks about it. And honestly, at one point, I saw Trump's face on my Bitcoin portfolio somewhere. I don't know how did that happen, but it was just super scary. You know, like I think this is like there's the financial side. There's obviously the production of the what we call as an asset side. And there's the ownership and the people side. What we're talking, the institutions and the global economy, is basically like, let's push it and say 10% of the global economy in terms of the people. And I think it's really, really important for people to be able to own the assets, trade it, and I don't know, like remember maybe if you have your grandparents who hold gold under pillows and everything, it is, that's the sovereignty we are talking about. And of course it is amazing to push the prices over 100K, but I think the core value should also follow the financials, because otherwise, if you try to strip the financial benefit from the core blockchain values, things like FTX happen, actually, because we are trying to follow the financial benefit, 10x's, 100x's, and everything, and we give away the right that's actually made possible by the technology, and then the whole collapse happens, people lose lifetime saving. And that's why I'm trying to also talk about the blockchain native values and open source values at the same time, helping the startups.
I'll make it short. So I look at it in a very different way. Bring them in first and then change it, because we need more money in the Bitcoin ecosystem.
Basically the prompt of the price, right?
And JT, would you like to add anything before we move on to hedging?
No, I think it's pretty. Look, I mean, I think there's a lot of original thinking right now. You know, you don't need evangelists because Wall Street's already in there, right? They're allocating as percentage for private wealth. Institutions, sovereign wealth funds, Abu Dhabi, etc. They already own it, right? So at this point in time, I don't think they really care what it is, right? They're saying, hey, this is an asset class. We need X% exposure. Let's do it.
Fantastic. But in your opinion, as a panel, are there other tokenized options that can act as a hedge, a safe haven during times of crisis or any turmoil? So we'll start off with Calvin over there before we move right to left.
I feel that anything that is in crypto can be tokenized, like BlackRock is tokenizing everything, tokenizing T-bills and so on. Maybe the rise of real-world assets, this should be something that is can help people hedge across the globe. If like Dubai properties 20 years ago is doing well, if there's tokenized, people can hedge it here. So probably RWA, I would say.
Then we'll go to Melissa next.
I mean, I like owning things without any mediation. So obviously, physically owning gold is one of the best things. It's the closest things. When you cannot carry around, that brings restriction, and then you're worried about the security and all that. Yes, stable coins, obviously, like under the regulated class, it is important because it gives you enough liquidity, it gives you enough option to like be mobile when you're actually doing that, and instant interaction with it. And I mean, like if you are in the space for some time, you don't need to trade actively, day trade any token, but you can get like 10% in like 20 days, 10 days with Bitcoin by just like doing small movements. and anyone can do this now. And this is also real-world assets, obviously, one of the regulated, MiCA-compliant Eurocoin project we invested in this season. And I think there will be, like, diversification is important. Obviously, like, we cannot strip all the asset classes and, like, make it all, like, people-owned and, like, distributed, decentralized, democratized and everything, because the risk and profit ratio is obviously, we have to mind that. But yeah, I mean, it's also important to, like, classify your risk group, what you are actually what risk you are okay to take individually, institutionally, and also it's different in different regions as well.
Fantastic.
If you
Over to-
tokenize gold, that's RWA.
Next up, we'll go to JT Law.
Look, I think I agree with that, right? I think if you just look at the last 5 months, right? So US elections, things run up. You know, Bitcoin goes to what, 106K, right? And then what happens in the last 5 months, right? Obviously, a lot of tariff talk and stuff like that. You know, a lot of fluctuation, a lot of currency movements. You know, if we look at the last 5 months, right? What's doing pretty well, right? Gold, Bitcoin, right? What's not doing well? You know, US
All
dollar.
other coins not doing well.
Yes, exactly.
Everything else.
Exactly. Right? But all other asset classes, right? Magnificent Seven, right? You know, they're down anywhere from, I don't know, 15 to 30%. You know, $10 trillion of market cap gets wiped out, right? So I think if we just look at it empirically, yes, there were some periods of time. Yes, you know, Bitcoin was not 94, 95K, right? It was as low as 74K maybe just 2-3 weeks ago, right? When I'm sure all of us were thinking again, should we update our thesis, right? But I think we need to take a little bit more of a longer term view, right? It is not trade in, trade out type of, right? If it's low, I don't like it, I'm gonna sell. If it's high, well, I want to buy in, right? That's generally a losing trade. But over long term, right? If you diversified, if you can weather storms, I think it does provide hedging, right? And I think that the world has to pay a lot more attention to that as time goes on. I think actually in the last 20, 25 years, actually has been pretty easy. A lot of one-way trades have been happening. I think a lot of the one-way trades will not be that easy to predict in the next 5 to 10 years.
And next up, Mansoor.
Thanks. So I think, like, when you ask about hedging is largely about managing and offsetting risk, right? And so I think while Bitcoin plays a role in that, it depends on what risk someone's trying to address. And so if someone's in a high inflation country in Africa or Latin America, like, simply moving away from, like, their local currency to US-backed stable coins addresses that risk, right? Where Bitcoin might be more of that hedge, if like maybe some would say, against the entire financial system, right? And so it depends what risk you're trying to address for. But I think, again, Bitcoin plays a role there. And if someone's got a portfolio of real estate assets in Dubai, they probably want to hedge real estate investments and the Dubai economy, right? And so maybe their Bitcoin isn't the right thing for them, right? So I think it depends on what someone's portfolio construction looks like.
Fantastic. So there's a very good term. It's called casino capitalism. Basically, if the main use case of blockchain is facilitation of gambling without any real use case, does it really have any value? Or can tokenization be leveraged in order to bring real returns based on real business, based on real asset holdings? So we'll start off with Mansoor in this case.
Yeah, so this is very interesting, and from my side, I've made a handful of investments in, like, RWAs, which are essentially tokenization of a handful of assets. And from a lot of conversations I've had with different treasuries in the space, many of them are looking to integrate RWAs, but most of the treasuries aren't buying the RWA assets themselves. And from my conversation with them, most of the time I've found that because they are large enough and have access to banking, they can typically buy those same assets at a better yield off-chain. And to give an example, like when T-bill rates were at 5%, a lot of the crypto, RWA variants, like Ondo or whatever, were offering 4.5. And so with the sum of money large enough, it may be worthwhile to off ramp and buy that through your broker, whatever other accounts they're using. And so this is kind of one of the things where I've found that the RWA variants are kind of being used by companies that don't have access to banking, DAOs, or just simply when they don't want to off ramp certain cash.
So I saw Calvin sitting up, priming himself to answer the question. Shoulders going broad. So Calvin, do you want to chime in there?
What's the question again?
So do you see a use case for blockchain beyond the facilitation of gambling, casino capitalism, based on real business, real returns, real holdings?
I'm not sure whether I should be saying this or not on stage, especially the video is there recording. So, okay, Pluto's made a lot of money. We have about, depending on the price of Bitcoin and Ethereum, about 800 million in AUM, pure profits. We paid back our 200 million to the LPs. So how do we make so much money? Literally out of thin air. All the tokens that we majority 99.9% invested in are all air tokens. If you know how to play the game, you know how to make this money.
Don't try home though.
It's a casino. It's a casino. All air tokens outside there is a casino. You need to know, founders needs to know how to sell, more importantly than how to build, right? Because it's a two-edged sword. Like just now, the panel before on GameFi, GameFi is dead. Why? Why GameFi is dead? Because if the tokens goes down, so does your game. It's game over. which is a fact. So the whole entire economy of tokens, nomics, is based upon before, I'm not saying now we have much better, smarter founders and so on. When we first go and invest in a project, what do we want to see in a founder? This guy must understand what's multi-level marketing or what's direct sales marketing. Because if you can sell this to a mass audience, and if you stand on stage and people just love you or believe you, well, your token will be successful, right? And there's so many tokens out there. Today, I promise not to mention any names. They built nothing. They still have nothing, but the token still pump. Why? It's the power of, I won't say that, but then I like to say these three words. The success of crypto and token depends on these three words. Manipulation stimulates speculation. Understand this? Your token will be successful. So, but things have changed since 2016 until today. We see, in short, that things are getting more solid today. GameFi projects is starting to understand that, okay, where are all the mistakes and so on. Blockchain, crypto founders are starting to realize that, whatever I've done before, I made some good money and so on. So things have to change. A lot of the tokenomics itself needs to change. I hate to say this, but taking 25-30% of the money you raise to support your token price is a recipe for disaster, right? You should be using the money to do something else, right? In the short term to maybe mid-term, you made a lot of money, you made some money, your investors are happy, I'm happy, if they don't spend that money, I'm not happy, right? So the key thing is that I see changes, and I feel that at the end of the day, real world assets, real world business, or RWF, real world finance, are bringing in the real business with real revenues, real profits back into the system and opening this up globally. That's the change that I really feel that is going to change crypto and blockchain forever.
Fantastic. If you want him to name names, feel free to approach him off camera. So, Mansoor, I saw you with a very quizzical look on your face as Calvin was speaking. I'm sure you want to give your 2 cents.
No, I was just amused that I was gonna say like, bro, I don't think you should be saying that on stage.
Yeah, I know, I know.
Uncut.
No founders will come and look for me for investment anymore. But then you will still come to me because I have additional formula to give to you.
Yeah, but one thing I do want to say, and as Calvin alluded to, previously in the earlier cycles, we saw a lot of tokens just build off a lot of hype, and many of them are not around anymore. But now we're starting to see more and more real businesses implementing blockchain, implementing crypto within their workflows, and they're generating real revenues. And we're starting to see a few, not many, but a few, and they're coming. And so I think that's a positive signal.
Fantastic. But he touched upon a really good trend there. GameFi. As it previously existed, issue a token, do an NFT sale, watch the prices decline, move on to the next game. Is there any recovery, for example, tokenizing game studios, or as a trend, is it completely gone?
No, I still believe that GameFi can make a comeback. I think there's been a couple problems that I've seen with GameFi as a whole. So first, I think gaming studios in crypto are way overvalued compared to gaming studios in the Web 2 world. Typically in the Web 2 world, game studios are commanding 3, 4, maybe on the high end, 6x revenues. Whereas in crypto, they're like fucking astronomical. Like, anyway, so that's the first problem. Second problem, in Web 2, typically the way game studios work is you launch a product and that game has a life cycle. And generally, in the peak of that life cycle, before it starts to decline, you're starting to cross-promote your next properties, moving your gamers over to that next product that you have. In Web3, what I feel like we've seen is the game studios will launch one product and have a token associated with it. And then as that product's dying, they'll launch a separate product with a separate token, and it doesn't allow them to carry over their users and build an ecosystem. And I think at some point when a game studio gets kind of that like full-on like life cycle marketing strategy correct, we may see some growth and moving gamers and keeping them within the ecosystem.
I agree with Mansoor. You know, games is bigger than movies, but games is a hit and miss kind of projects. So like literally I've been advising a lot of game studios that want to raise money via tokens. You should raise money by tokenizing your company, tokenizing the studio, instead of tokenizing the game, right? So this way you have more chance of getting the investors in and making fans part of your company, part of your whole entire culture instead of one single game itself.
Fantastic. But we'll close with this question because we're running short on time. We'll start with the middle two before moving outwards. As a VC right now, of course, you have an investment mandate to meet. How are you positioning yourselves in this bull cycle or in the upcoming bull cycle? Are you going all in on Bitcoin, or do you see other options at this moment in time? We'll start with JT, move to Melissa.
Not
and then
financial
we'll go
advice.
Yeah, not financial advice. We and some of our peers are moving to I guess what you call a secondary or an OTC strategy, right? These are projects, they've listed their token, there may be some lockup, there may be some vesting schedules in there, but you know, there's a lot more data, right? You see their users, you see their on-chain traffic, and you cut a deal based on the discount to the current price, right? That seems to be very popular right now.
So JT, I want to ask you there very quickly, approximately, just to educate the audience, approximately what type of discounted rate are you currently being offered?
Private deals.
The range is wide, right? Obviously, it's right. The more attractive deals, the less discount. The more desperate deals, the more discount. And you're seeing these with some very large tokens as well, right? Maybe they want to shore up the treasury position. So I'm not going to name names here, but even top 20 will be selling down as well.
Fantastic. Next up, we'll move to Melissa.
I think I just want to say a few things about
What
the,
get you excited besides Satoshis and Bitcoin?
I mean, there are are quite a few projects. Like there are gaming projects and every GoFundMe, label it in a different way and just